A dire warning from Citrini Research went viral, sparking fear across Wall Street. The report painted a dark picture, high-paid professionals forced into gig work. On Monday, technology stocks like IBM and Datadog led a sharp market decline. Investors fled to safety, boosting gold and consumer staples like Clorox and Kroger. This calm at the macro level masks wild gyrations at the micro level. AI is a tool, not a human replacement. For many, AI remains a powerful tool to enhance human productivity. Revolution or disruption? The AI debate on Wall Street has only just begun.
ツマンおじ今日のニュースを読みます。The New York Times Bleak research report stoked AI debates on Wall Street. In a widely circulated note, Citrini Research painted a dire picture of job losses and stock market sell-off, though many analysts and economists questioned its conclusion. By Joe Renison, February 25, 2026. Concerns about artificial intelligence have been brewing on Wall Street for months, but the reaction this week to a small research firm's dire scenario that AI will drive mass unemployment and the plunge in stock value reflects a deep skittishness in market. In a note that was widely circulated on social media over the weekend, Citrini Research painted a dark picture of what might happen to the economy as AI upended white-collar work. The report described a well-paid professional forced to become Uber driver and miss their mortgage payment by displaced tech workers in Seattle and Austin, Texas. The Citrini report was cited as one factor fueling a modest decline in the S&P 500 on Monday. Although the market rebounded on Tuesday, the report continued to stoke the debate among the investors and policymakers about the extent of AI disruption. Some bearish investors said the report amplified previous warnings about AI's threat to the economy. Others, including Federal Reserve Governor, brushed off the report's conclusion. The argument leans heavily on the narrative and emotion rather than hard evidence. Jim Reid, a strategist at the Deutsche Bank, said of the report, "That doesn't mean it will ultimately be wrong." But he added that the virus to substance ratio is undeniably high. The viral nature of the research report, which was viewed millions of times online, appeared to tap into investor angst that has stalled the gains for the stock market recent leaders, led to heavy losses for companies deemed vulnerable to AI, and lifted some previous unloved sector. In recent months, investors have been both questioning how revolutionary AI will be in practice, undercutting the lofty forecast for profit growth at some large tech companies, and asking what could happen if its impact is actually far greater. The research by Citrini sought to model that might happen to the economy if the current lofty expectations for the impact of AI end up being so conservative. Citrini published macroeconomic research. Citrini Research did not immediately respond to requests for comment. On Monday, the S&P 500 slumped 1%, a modest drop that masked the volatility, with big moves either higher or lower for individual stocks largely canceling each other out. IBM and Dog Data, another tech company, led the losses, both down over 10%. Consumer stable stock, which are seen as safe and reliable, benefited with Clorox, Kroger, and Mondelez all rising. By Tuesday, the S&P's sell-off had already halted, but the churn beneath the surface continued. The index rose 0.8% as some of the companies that had sunk a day earlier floated higher again. IBM rose 3% and Dog Data 1.5%. Expedia, the travel booking company, rose 5% in Tuesday after a 7% drop on Monday. The stock swings are illustrative of increasing wariness of artificial intelligence narrative that underpinned the large gain in the stock market in recent years. According to analysts at the Barclays, the S&P 500 had traded within a 2.7% range of the past 6 weeks, its most muted movement of the past century, besides spells on 1964 and 1966. But individual stocks on average have had moved nearly 7 times as large as the index. This calm at the macro levels masked wild gyration at the macro level, the Barclays analyst wrote last week. The S&P 500 flatlined this year after rising 16% in 2025 and over 20% in 2024. The Dow Jones Industrial Average is slightly higher, while the tech-heavy Nasdaq Composite Index is slightly lower, as investors have shifted away from the AI themes and toward other sectors that have lagged in recent years. On Wall Street trading desk said in a note to clients on Tuesday that the indiscriminate selling of technology companies at the start of the week was similar to trading it had been seen for months. The price of gold, seen as a haven in times of market worry, rose sharply on Monday before easing somewhat on Tuesday. On Tuesday, Christopher Waller, a governor on the Fed board, noted that he had not read the Strini report deeply, but pushed back on the broader idea that the AI will lead to the rapid rise in unemployment as technology displaces white-collar workers. I don't think that is going to happen, Mr. Wheeler said, adding that he is not the doom and gloomer like the report was. AI is tool, he said. It is not going to replace us as a human being. 以上です。